Hello, friends. We got a lot to cover and unpack, so I'm going to actually probably skip a few slides if I'm being honest. Feel free to pause them. Some of it's kind of like redundant from what we've been talking about for a long time, so you'll get the gist. And realtors and builders, if you're in the real estate community or the building community, I'd love your feedback on two of the things we're going to talk about here towards the end. So first of all, rates, my oh my oh my, they just keep getting beat up. We're pushing the high eights, guys. This is from Mortgage News Daily. You guys can kind of see how this has played out here for the last 90 days or so, but it's been no bueno. And you guys can see the mortgage-backed securities market. You guys can see these, red's bad. You can see the slide. Hopefully, looks like it's oversold. Maybe this is the bottom and where we can start maybe holding and then get some ground. But remember, we talked a couple weeks back. Every time we touched this 50-day moving average, we never broke above it. We kind of called it. We've been locking for the last 2 weeks because of this. So don't love where we're at, but I'm hoping maybe we establish a new bottom and can make our way back as inflation comes down. So speaking of which, tomorrow, Friday, inflation will come out on the PCE. Again, you guys can pause this. It's being more stubborn than we want. The Fed's saying that they're going to keep rates higher for longer. They don't see it coming down. I think it will. But again, we've heard that over and over. I've been sharing this with you as it comes out. Guys, notice the yellow. Those are all-time highs for house prices. So pick whatever one you want, but Case-Shiller, FHFA, CoreLogic, Black Knight, Zillow, they're all saying house prices are now at like all-time high in real estate values. It is a good time to buy a home. Yes, rates are not great, but it's a good time to buy because houses keep getting more expensive. And why? We've talked about it. It's inventory. Again, feel free to pause if you want more, but basically builders, you're not building enough. And I understand why. When rates go up this high, it gets a little soft, so you pull back the reins a little bit. That's what happened this time last year. And that's why right now the house starts, even now at this moment, are down a little bit. So median home price, guys, when you see the headline, just remember median is not the average. Median just means if there's 5 homes, it's the one, it's number 3 in those homes. It's the one that's in the middle. That's a median. So in the house prices, the median home price is down 1.4%. Just remember, it just means that $1 million home, maybe a $300,000 home sold instead of that $1 million home. So it shifts the median down, not the average, but the median. So it just means more homes, smaller price homes are selling than the higher price. And that's what makes that median value come down. Cash outs. So we've been talking refis. We've seen a few, some uptick in this. People think, man, I got a 3.25 rate. Pause this and look at it. If you know somebody with credit card debt and it's at an all-time high, so if you got friends or friends or family that have credit card debt, check it out. On the right side, the installment and revolving, this is a real life scenario. Somebody we worked with, that's $3,000 a month. We're going to go away in payments and obligations because we're going to pay off their revolving debt and their installment debts and free up $3,000 in cash. So yes, nobody likes trading in a 3.25 rate for a 7 point something. However, Americans have more equity than ever. It's a great time to actually save some money. So no, I don't love trading the 3 in for the 7. I'm not advocating that, but I promise you your mortgage payment with a 3 to a 7 is not going to increase by $3,000. It'll be hundreds of dollars, but not that much. Housing bubbles. United States, we're in the bottom right or the far right, bottom box. Check it out. This is as it relates to disposable income versus the actual housing price. So you guys can see, for the most part, even during the blip of the 07-08 time period, like the run up to it, for the most part, it's been pretty, they correlate. How about that? But then you start looking at some of these up, like just Canada in the front, top left, and Australia underneath it, where house prices are compared to the actual disposable income, big gap. So while we think our housing is expensive relative to the income, because remember, guys, people have gotten pay raises. Yes, housing prices are more expensive, but people are getting paid more than ever. With unemployment being like all-time lows and having been this for a while, you guys know if you own a business, oh my gosh, if you've gone to restaurants, it takes a lot. You got to pay these people a lot of money to come to work because it's so hard. So people's incomes are going up, and it's somewhat matching with housing. Obviously, this, COVID changed that. You see a little blip there for us, the United States, but man, God bless America, better than these other countries. Here's the other thing about the risk. People like a housing bubble, it's all going to come down. Man, last time it was so many ARMs, subprime mortgages, all those nasty things. United States, we're in the very bottom lower left, meaning there are very few ARMs out there. And again, as I mentioned, house prices, look, the only people that don't like the house prices are the people about to buy. But all those that are homeowners that have owned the home for the last 2, 3, 4, 5, 10 years, you couldn't be happier. House prices are higher, which means you are now more rich on paper. So you won't need to get foreclosed on. You can sell it and make a lot of money. But check out Norway and Australia. Like those are the countries with problems where you get arms and the kind of DTI, if you want to call it disposable income, like no bueno up there. So good, again, good for the United States. I'm just throwing it out there because people keep talking about, I'm waiting for the bubble, waiting for the housing. Look, I don't think it will. I could be wrong. I'm sure someday in the future there'll be a housing boom, but I don't see it in the immediate future. And this is one, I think it's one last. I might have one more after this. Mortgage originations by credit score. Look at all the pretty blue. If you're in North Carolina Tar Heel, you love this chart with all that blue. The blue is the really good credit score, 760 and up. Look at all this blue of originations. Go back to 07, 08, the first third. Look how much was all the gray. Gray's that median, kind of like it's okay credit scores, and they're good, median to good. But certainly look at the yellow and the dark blue. Like that dark blue is the worst, under 620. Look at all that bad yellow and blue on the bottom and the first, call it quarter of this chart. So again, loans have been safer than ever. They've been fixed rates to good borrowers, things of that nature. So we're not in the same scenario. Inventory. So we are the really thicker brown maroon. If you're an Aggie, it's not a good looking color, right? But if you're an Aggie, you might like it. But this maroon color, just look at our inventory. Outside of the other 2 years, which are basically COVID, this is the lowest inventory's been by a ton. Look at 2017, 18, 19, pre-COVID. Look how much more inventory there was on the market. So people are like, inventory's going up. Yeah, good. We need it. There are a lot of buyers that want to buy homes that aren't out there. So we're just still supply and demand. And I'm sorry I'm on my soapbox, but my goodness, pending home sales continue to lag. Yeah, builders are having troubles getting these things built. God love you guys for doing what you can as the builder. But at the end of the day, yes, it still lags, but there's still inventory shortage. If the home buyer doesn't like the houses that are available, they're not going to buy. So pending home sales continue to lag. I understand that. I just thought this was interesting. Florida overtook New York as the second biggest housing market. I had no idea, to be quite honest, that New York was the largest housing market. I had no idea. So there you go for some states. Texas, number 4. God bless us. I have to bring this up, not to rub this in or salt in the wound for all those RE/MAX folks out there watching this. I'm sorry, but I wouldn't be doing my job if I didn't report it. Unfortunately, RE/MAX had to pay a $55 million penalty, or not a penalty. I'm sorry, they settled. It's probably the right word. And you guys can read the verbiage down here. I copied and pasted, so that way I'm not putting words in other people's mouths. But prior to that, there was another settlement for like $83.5 million. And that was by, you guys can see it, Anywhere Holdings, which is like Coldwell Banker, Century 21, Sotheby's. I'm not going to make any comments on this. And this is a real estate community. If you have opinions, and I'm sure you do, I'd love to hear from them. What would you like me to put out there? And, just what do I need to know about this? Because reading it, I'm like, I don't understand it. I mean, I do, I get it, but I don't. Lennar Homes. So last week I pushed that they were doing something in Denver at 4.5, poking around their website, guys. In San Antonio, they're selling homes for $130,000. I was like, how do you build a home in today's world for $130,000? Look at the square footage, 350 square feet, 661 square feet. I called somebody from what they know. And again, this is unofficial. These things aren't selling as hot as they thought they would. I don't know. Maybe I'm right. Maybe I'm wrong. Builders, I'd love your input. If you were able to build something like this and put it on the ground, do you think there'd be a demand for it? I don't know. Maybe San Antonio's a different market than here. Who knows? But I just thought this was wild. And then lastly, for fun, a $10,000 bill sold for $480,000. So there you go. If you got money that's uncirculated, guys, keep it. And who knows, maybe 100 years from now, you can literally 40x your money. So I just thought that was cool. Guys, get social. As always, the little QR codes up here. You can scan it with your phone if you're not watching this on your phone, or just, do any of these things. Follow us. I appreciate those that have made good comments. Apparently, we got some funny videos out there that have been posted at my expense. That's okay. I'm happy to do it. We want to entertain and educate. As always, guys, we appreciate you. I know it's a long video. I thought this was really good stuff. So call us, builders, realtors, email us, mortgagemark@mortgagemark.com. Send us something on social. Let us know what your thoughts are on those homes at 300 and 600 square feet as well. It's just the settlements that have been going on in the industry has been crazy. We appreciate you as always. I hope you guys have a great and wonderful weekend. Bye-bye.